Good afternoon. This is Jalak Jobanputra, a founding partner of FuturePerfect Ventures. It's great to be here at Fintech South, and I'm really excited about this next conversation. We have three crypto OGs talking about the original crypto OG, which is Bitcoin, of course. Now, in this day and age, we're seeing so many new cryptos being issued. Kind of akin back to 2017, and we're going to talk about whether Bitcoin is going to hold its position as the original, the most secure, and the most used crypto out there. So with that, I'd love to introduce my panel or have them introduce themselves. Stephen, do you want to go ahead first?
Sure, thanks, Jalak. So my name is Stephen Pear. I'm the co-founder and CEO of BitPay. Our company processes cryptocurrency transactions for companies, and we provide them with e-commerce tools and help with their marketing of their products and services to reach a cryptocurrency audience. So we allow a number of different cryptocurrencies on our platform, including Bitcoin. But we've been at this for a long time. We're coming up on our 10-year anniversary, which makes us the world's oldest blockchain company. And our headquarters are in Atlanta, but really, and actually, we just announced that we shifted our headquarters into cyberspace. So we've been working remotely for a long time now, and we'll continue to do that into the future. But yeah, happy to be a part of Fintech South, this virtual edition of it.
Catherine?
Yes, well, if Stephen's the oldest blockchain company in Georgia, we're probably the newest. Binance US is a digital asset marketplace that just launched in Georgia in September 15th, I believe was the day, but we've been operating for about a year all over the rest of the US. We have about 40 states that we serve, as well as offer 100 different trading pairs, making that about 50 different cryptocurrencies available to buy, trade, and earn crypto on our platform. So equally exciting, but definitely a great place to come for learning about digital assets, specifically Bitcoin.
Well, and Atlanta has been a major hub for fintech, and I know, Stephen, that's why you had originally headquartered there, and can draw upon all the expertise that Atlanta has, and we've certainly had a number of portfolio companies in the region. So, so we have two very different, I think, perspectives from both of you in terms of where you're coming at in terms of Bitcoin and other cryptocurrencies. So when I started investing in the space in 2013, it was really pretty much the only crypto in town. That was before the Ethereum ICO. And Stephen, you started the company even before that, and so I'd love to hear from you how you've seen the evolution of is Bitcoin holding up to its original promise as a medium of exchange? Are you seeing other cryptocurrencies start to come in on those use cases? And so just talk about these 10 years that have gone by rather quickly.
Yeah, well, we started the company in 2011, and back then that was the only cryptocurrency, and obviously started with Bitcoin, then added a number of others after that. But still today, Bitcoin represents about 85% of our transactions. So it's by far the largest, and it doesn't mean to say that the others don't have a bright future, but Bitcoin is still currently the preferred payment medium of all the cryptocurrencies that we support. I do think that Bitcoin, being the original and being a very stable platform where people know how it works, and it works just the same today as it did 10 years ago, and people knowing how it works and the limitations of it, that stability is really important for adoption, right? People have grown to understand how it works and just build infrastructure around that. So I think that's why you continue to see Bitcoin being the dominant cryptocurrency today. And I do think going forward, it will continue that way. It maybe isn't suitable for certain kinds of payments, but for higher value transactions, it's definitely the preferred choice. And you might use some of the other cryptocurrencies with better scalability characteristics. But when it comes to using the most secure platform, Bitcoin is usually the choice.
Interesting. And so, Catherine, you represent Binance, and Binance has been the largest crypto exchange in terms of volume around the world. And as you mentioned, you recently launched, or over the last year, launched the US operations. I'd love to hear, and Binance was actually one of the first to have a native token as an exchange. And so you see a lot of volume across different cryptos. And so what have you noticed with Bitcoin as we've seen the issuance of so many new cryptocurrencies?
Yes, so Binance US is an independent US-based marketplace where we provide the same services that others around the world are able to access, easy on-ramps into the cryptocurrencies, as well as a variety of ways to interact with them. But the interesting part, if you take it as just being a marketplace owner, or even deducing my role to being head of a cafeteria, we offer many types of items on our menus. And it's unique to see certain parts of the market demand different things at different times. And that's where we're really staying nimble to adjust our cafeteria menu, you could call it. I had an analogy a couple of weeks ago that is actually quite pertinent to the Atlanta scene. If Bitcoin is Coca-Cola in terms of carbonated beverages, there's always going to be a time and a place and a need for a good ice cold Coca-Cola. But there's also going to be a time and a place for a caffeine-free version, or maybe an iced tea or a lemonade, or even a glass of water. And so you're going to need those different aspects or different cryptocurrencies depending on what people are needing in the markets, or depending on what the utility really comes down to. So as our kind of marketplace owner or cafeteria owner, we're going to be providing a selection of those, while knowing, much like Stephen, Coca-Cola is top preferred among those that come through our doors.
Well, it certainly has the brand, and it's interesting. I mean, I'm sure you both feel this way, having been in the sector for a while, where Bitcoin was the fringe, and it's really become a lot more mainstream. It has a long way to go, but that's the exciting element of it. And what do you think? And I'd like both of you to answer this. I mean, we've had a lot of announcements about institutions increasing their exposure to Bitcoin or Bitcoin futures, especially over the last 6 to 12 months. What do you think has been, or you can pick a few events that have been most seminal in terms of generating interest and having more people have exposure to Bitcoin specifically? Stephen?
Catherine? Okay, I'll go. Well, I mean, very recently the OCC came out and announced that banks and traditional financial institutions can start custodying assets for digital assets for people, and so I think that's a really big development, and we'll start to get companies who are always looking for new markets, new businesses to enter into, to start to consider that. And I think it's also just a signal that as long as you are respecting the regulations, that it's okay to use this new technology. And so I think it's a great thing. And yeah, I don't know. So I think that's probably the biggest, most recent bit of news.
Yeah, and that was just, I'd say, in the last month or so. So we're definitely seeing developments there. Catherine?
Yeah, I'd say even probably 6-9 months ago is when the foundational elements of Bitcoin became tangible. You'd always heard that Bitcoin was the resilient form of currency that would allow us to adopt this new technology frontier that we were headed into, or this way of internet living. But we still did a lot of things in the physical realm. We still did a lot of things in person. We still handled a lot of the world day-to-day involving interactions. That really changed quite drastically in March, when most of America went into lockdown, and we were able to see kind of what we needed in order to work in a digital realm. For instance, virtual communication like this being the predominant way we now interact with people, and going forward, Bitcoin being the predominant way that we could be handling transactions, being sure that they're going to be settled appropriately because we can see so on the Block Explorer, and begin to really rely on a currency that is transparent as well as, natively digital, and providing this resilience that we're not really sure where the world is headed. So I think that's really where we put the dream scenario for Bitcoin to be a strong kind of leader, and we put it in real life, which was a lot for people to understand, and finally seeing the examples of it made sense. It wasn't just a fantasy that people were imagining and preparing for. It became our reality.
And I mean, that's a great point. We're seeing digital payments kind of take off everywhere. And it's interesting because we were early investors in Aza, which used to be called BitPesa. And they kind of modeled themselves around a crypto or a digital equivalent of M-Pesa, which is a mobile money system in Kenya, but they kind of offered this platform worldwide. And I've often said that, these emerging markets that were unbanked or underbanked saw the promise of digital payments well before the US, and talking about like non-credit card digital payments, more real-time digital payments. Have you seen specifically in the US increased interest in I'd say crypto in general, and then we can talk about Bitcoin specifically?
Yeah, I would say we have only the US to rely on because that's where our user base is. So for us to be a company that began in September 2019 with no users and no volume on our platform, we have seen an increase in people's appetite towards getting a functional way of converting dollars into digital assets, and likewise digital assets back into dollars. And so that's really been kind of the fascinating pushes, that this excitement is mostly new users, mostly folks that are not crypto savvy, because the crypto savvy folks, much like Steven, already have their crypto well secured in cold storage and don't need an easy on-ramp like Binance US. So our audience that we've been predominantly catering to has been first-time users of crypto, people that were wanting a less intimidating platform, or one that would help them guide them through their digital journey. So tailoring not only to a younger skew, but also those that are kind of taking their financial futures in their control for the first time.
Interesting. So you do think that there is a difference in the demographics that are attracted to crypto?
I think so. Crypto itself has brought the conversation of money from one echelon of persons down to anyone can have a conversation now. It really is quite remarkable, breaking that taboo of discussing money, making finance more kind of table conversation, and bringing it to a larger audience is really one of the benefits of crypto, partially because of its inclusive nature and the need to stay constantly educated on it.
Well, I also think this concept of micropayments, right, and being able to transact in small amounts, and if you look at the emerging markets, that was really why most banks and institutions and credit card companies really didn't find it profitable to operate in where we have the largest growing populations in the world, and increasingly post 2008 crisis, which is about the same time that Bitcoin was established and created, we've seen more underbanked and unbanked in the United States. And so I think this ability to have flexibility that computers and technology has enabled in different parts of our lives really has only recently reached finance and money specifically. And Steven, so I mean, you were way ahead of your time in terms of thinking about establishing an infrastructure to allow people to use their Bitcoin, and kind of you educated a lot of the market in those early days and continue to do so. Where you mentioned that high value transactions are really where you're seeing a lot of interest. Do you see that starting to change in terms of going to more microtransactions or everyday transactions? And have you seen any of that evolution?
Well, we've always, had our average transaction size is probably about $400, and that's a pretty good price point that works well for Bitcoin and for the others. But we also do plenty of transactions that are $5 and $10. You know, we in the video gaming space, which seems to be you know, a good area for us. You know, you have a lot of people buying video games for $5, $10, $20. So it's not like those transactions aren't occurring. I was just saying that for Bitcoin specifically, where there's limited capacity and higher fees, but also a lot more security, for those transactions where that security is really important, that you know, Bitcoin makes a lot of sense. But for sure, you know, and back when Bitcoin was a lot less valuable, and also didn't have, you know, the congestion that it has today, you know, we would do plenty of transactions for $1, $2 as microtransactions that you call them. But I think there's probably room, you know, when Catherine talks about other room for other blockchains, there's probably room for chains that specialize in those low value transactions, those micro transactions, and in higher volume transactions, but maybe compromise a little bit on security and a little bit of maybe on decentralization to get to that scale, right? So there's plenty of room for that kind of application of the technology.
And we've heard a lot about the Lightning Network and kind of these layer 2 solutions that are being built upon Bitcoin. Well, Lightning is specific to the Bitcoin blockchain, but we're seeing these layer 2 solutions emerge on most of the established chains out there. Do you see, have you done anything in terms of experimenting with Litecoin or sorry, not Litecoin, yeah. Lightning, or other layer 2 solutions on the Bitcoin blockchain?
We have, in fact, even before Lightning existed, we were doing a lot of research on and work within BitPay to try and create what was a very similar solution to Lightning, which is based around payment channels and routed payment channels. You know, but I would say right now the most popular layer 2 solution is like ERC20 and the ones that enable other assets to be issued on top of a blockchain. And we see a lot of demand for that. And we support 4 different US dollar coins on our platform as well, including Binance USD. And we see a bright future for that, because a lot of companies and people that transact, they don't necessarily want to think about the value of their cryptocurrency going up or down while they're trying to do a capital purchase, for example. And, you know, if it's a company, you've got to account for those gains and losses when you bring that asset onto your balance sheet. So for them, it's preferable to transact in whatever currency is their accounting system is based in, right? And then we have a platform that just enables that to all be seamless, so that one company can pay another company in their preferred currency, and the receiving company can, you know, be settled in whichever currency is their preference.
So it's really about making the technology more invisible and user friendly, but offering convenience, lower fees in a way that hasn't happened before. And Catherine, I know in the pre-call you talked about stable coins and the interest in stable. So can you talk a little bit about what you've seen in the stablecoin space?
Yeah, I think Stephen brings up a great point that the early adopters that caught on to Bitcoin already saw you know, a lot of what was ahead of them. But for those of us that were a little bit slower into understanding the technology, taking that volatility out of the equation made it a little more palatable. So realizing that you could put your wealth into a digital version of it, but it also still be stable and pegged to the dollar, might not necessarily be the purpose of what Bitcoin serves, but at least helps people gather the differences in a digital version of their money and kind of where they currently are storing it. So I think that's an interesting kind of baby step into the right direction for folks that are beginning to navigate it with their treasury, beginning to understand how they could be moving funds on the weekends or being able to make settlement times a little bit faster than traditional fiat rails. So that's really kind of a unique step that we see. It also might be easier on the taxation side. So if you're withdrawing to pay something quickly, you're not going to be making that too much of a a taxable event based on that P&L, because it's one-to-one with the dollar or as close to it as you can. But it does bring into question, is that really the play out if people are looking for something that is stable to the dollar, and yet the whole purpose of Bitcoin was something that had a monetary policy quite different than the dollar. So it's a step in the right direction, but not the entire purpose of digital assets.
Well, there's certainly a debate within the industry, right, and the sector of kind of the purists and the folks, I'd say, that also want to see adoption of the technology and a more open, financial system, and so, I feel like we're taking steps towards that, but it may not be as quickly as some of the purists would like. But I've personally seen a lot of impact. I mean, and if you look at central banks talking about their central bank digital currencies, and that's a very different animal than Bitcoin. But I think without Bitcoin existing, I'm not sure we would be having those same conversations around that. So let's pick up a little bit on the impact of Bitcoin on the monetary policy, or your views on where you think it's had impact and will continue to have impact. Stephen?
Well, I think the role of a cryptocurrency like Bitcoin, or the way it functions, if you look at it, is it's got a defined supply function. And so the price of Bitcoin varies with supply and demand, right? The higher the supply, it pushes the price up. The lower the supply pushes the price down. The higher the demand, it pushes the price up. The lower the demand, the price falls in response to that. But you have this stable supply function. And so what it means is that price is always going to be very reactive to changes in demand. And that is, the price of Bitcoin almost in a way functions like interest rates. And, when the price of Bitcoin is higher, what do you want to do? You want to maybe it's time to spend a little. And then when the price is lower, maybe it's time to save. And so to me, that sounds very much like how interest rates are supposed to work. On the other side, if you look at some, a national currency like the US dollar, there the supply function is variable, and the demand is also, of course, variable. But in theory, they change the supply to match the demand, so that what you get are stable prices. And then over time, you can price things like contracts, like price your mortgage in terms of the dollar, for example. I know I would not want to take out a mortgage for a house denominated in Bitcoin, right? So I think there's a place for both types of currency, is what I'm saying. And if you don't like the exposure to monetary policy that you get with a national currency, you have the option of storing some of your wealth in Bitcoin, right? Or another cryptocurrency that functions like Bitcoin. But today, I think most of the cryptocurrencies are still, their value is, and the demand for them is still largely driven by speculation about their role in the system in the future. And it's still a risk asset, right? So you see it kind of trading together with other risk assets rather than it being treated like an alternative to gold. I think it may one day be regarded that way, but it's a little bit early for that, I think.
Catherine, do you have anything to add to that?
I think it brought definitely the highlight that you could have a alternative to the monetary policies that we receive by being citizens in our specific countries. So having a mathematically denominated supply is kind of revolutionary. And that's kind of really unique to be able to see Bitcoin's kind of core code that delivers items like the halving, where you have kind of these policies in place that are set out to improve or reduce or manage that supply as needed.
Do you want to interject? Do you want to explain what the halving was?
Sure. I mean, one of the unique factors of Bitcoin was that it had this rewards mechanism, the ways of which you were able to earn Bitcoin through mining Bitcoin. Those rewards are halved after certain amounts of time. So this May, we just went through the third halving. I think it was the third, with the prior one being in 2016. And it really means that you go from receiving 12 down to 6.25 in terms of your rewards for completing mining for blocks. So I think that mechanism we've seen back in 2016, we saw, and the excitement of Bitcoin actually take off 18 months after that halving event. So there's not necessarily an immediate reaction to the rewards mechanism being halved, but possibly one that takes a little bit of time before people recognize the constraint that this policy has on the reward system.
So are you predicting a big price increase 1 year from now?
I'm happy to say that. We saw a huge surge in education around the halving of new folks just kind of turning their heads to this. And there might be a reason because we were all trapped on our couches and there was only so much to watch, and CNBC was covering it just as much as Bloomberg was. So kind of anyone in the markets were getting a little bit more glimmer of Bitcoin coverage than they used to on a regular day. You also saw greats like Paul Tudor Jones come out and step forward. And for kind of the other side, you've seen the likes of Barstool Sports, Dave Portnoy learning about Bitcoin and cryptocurrencies as well. So this kind of mainstreaming is occurring maybe out of the boredom of us being in our homes, or more importantly, the purpose and the adoption that I see taking place globally.
Yeah, I think it's a perfect storm that's come together. It may not be, Bitcoin has not performed poorly this year. It's been up over 40%, I believe, and is well off of its lows just like 18 months ago. So it's performed well, but it's actually had less volatility than some of the equity markets and other oil and certainly other asset classes. So in some ways, I don't feel like it has the headlines it used to, but underlying usage and exposure seems to be certainly increasing, and certainly a lot more education in the market about the potential of the technology. So we have a couple questions from the audience, and one of them is, and Stephen, I think this would be directed more towards you, but when do you think, what do you think is going to be the catalyst for widespread B2B adoption of crypto payments? We talked a little bit about stable coins and just other infrastructure that can kind of reduce any currency risk associated with Bitcoin. But what do you think is going to spur the greatest adoption, whether it's related to Bitcoin or other cryptos?
Well, I think it's the international use case. So what we see a lot of are companies paying their vendors and suppliers across borders. And so the technology really lends itself well to that use case, because when you're talking about currency conversion and even the technicalities of how the banking system works, a cryptocurrency payment is much faster, happens as fast as email. We have some customers that tell us that their only other alternative is, takes about 90 days or 3 months to get a payment all the way through the banking system. And the reason for that is, imagine if you were going to accept payment from somebody based, in South Africa or something. And that person says, oh, great, I'll send a check to you in the mail. And the check's written against a bank in South Africa. That bank has to have, maybe that bank doesn't have any correspondent banks or any ties into the international banking system, but there's what they call the correspondent banking system. So you have to go through these different hops, and every hop has trust issues and risk associated with them to make that transaction actually occur. And cryptocurrency does away with all that. What you do instead is, at the endpoints, let's say you don't necessarily want Bitcoin on either end of that transaction. On one end, you might be buying Bitcoin and then you make the payment. And then on the other end, you're selling the Bitcoin and converting it into whatever currency you want. But that transaction that happens in between across borders, it's for the first time we have a digital asset where the transaction itself is a thing of value, where the custody of that thing of value can transfer electronically and without the need of any intermediary. And it has a market value, so you can go buy it on one end and sell it on the other end. And so it's a brilliant thing. And so I think, to bring it back to the question, I think the international use case for payments is really what's going to drive most of the growth in the B2B space.
Interesting. And we've certainly seen that through our investment in Aza. And started that company in 2013. And really, I mean, a majority of their business is now in the B2B space, because it's really exactly what you said. The number of correspondent banks and that a transaction would have to go through adds not only time but fees, as Catherine also made a notion about, and so it really allows a lot more businesses to participate in kind of global GDP and transactions, and I think it's better for all of us to have options on who we transact with, and so I think the implications are just phenomenal for everybody, and not just those businesses on the ground in these emerging economies. So another question is, I mean, I love this question because it's a lot more kind of personal. Somebody from the audience asked, what was your path to the crypto space, and what did you do before to kind of end up in the crypto space? So Catherine, I'll let you start off with that.
Sure. So I intimately know what Stephen's talking about in terms of the cross-border and the international payments pain points of the world, because that was my prior life. I was a foreign exchange trader based in Hong Kong, working with all of the local Asian market currencies. So anything onshore, you'd have to go buy it through me in order to buy your Korean equities or your Malaysian equities. And that's a skip step that people forget that has to happen in order for people to invest in foreign markets, is you have to hold the currency of those assets in order to partake in it. So fully kind of well-versed in those idiosyncratic, highly regulated, confusing markets, and dedicated what I thought would be my rest of my career to foreign exchange. That pivoted quite quickly when I continued to recognize that electronic trading was taking over the foreign currency markets. And so I said, okay, I'm either going to turn into a robot, or there's going to be something else out there, a new market, a new wave, a new currency that I need to be paying attention to. So I was late to the game. Happily, Stephen was well into his 6th and 7th year of work before I dove into crypto. But I put both feet into a kind of cross-border payments solution through Ripple, and worked there for 2 years before saying, full stop, the infrastructure in cryptocurrency landscape still needed to be improved upon, and specifically in the US. Wanting to make sure that more Americans were not left behind this, as the trend was headed towards global dominance of digital assets, not US-based dominance, which the US has been leading the capital markets scene for quite some time. And so that's really been my dedication, is to make sure that America has its infrastructure in place, as well as the right components to make the rest of the world able to be both compatible and move forward in the right ways. It's a little bit of everywhere, but it's always been.
No, that's a great story.
Always focused on the world and how money moves around it quickly. And I've always been trying to make those fees lower and lower.
Good for you. Stephen.
So how did I get into the crypto space? Well, I mean, when I first came into it, there really wasn't a space. It was in 2011. And by that time I had been actually back up even further. In the early 1990s, I was a fan of something called DigiCash, which I think was the world's first cryptographic payment system. And by the way, my background is computer science. So I was very fascinated with, cryptography at the time, and got really fascinated with this concept of DigiCash, which back in the early 1990s, we still used something, called physical bills and coins for a lot of payments. And so you were thinking really hard about, how do you replicate a physical medium of transfer entirely digitally? And DigiCash used cryptography, but it was a centralized system. And when they went bankrupt, that payment system went away with it. And gosh, I was just, I was mostly in telecommunications in my career prior to BitPay. But I was very fascinated by this concept. And there was a lot of debate, and a lot of computer scientists that thought it was impossible to create a payment system where you didn't have a central party, like clearing all the transactions and making sure there weren't double spends and things. And then Bitcoin showed up, and I was really fortunate that I had thought about this problem domain for a decade prior, well, almost 2 decades prior, and that when I actually got around to reading the white paper behind Bitcoin that introduced Bitcoin, it really clicked with me, and it just career-wise, it lined up with a time in my career where I was looking to get back into a startup. So yeah, I didn't really bounce around. I think my previous product that I was with in the telecommunications space, I was there about 7, maybe 8 years. Really early in my career, I went through a couple of different companies, but
yeah, what I love about this space is that, well, people come at it from different sectors and industries. There, you can see a thread of wanting to make the world fairer, offering alternatives to centralized systems, and I've certainly encountered a lot of entrepreneurs who were at Lehman in 2008 and saw the failure of the system, or so I love the fact that there are threads, regardless of where people come at this from. So my story is that I got interested in Bitcoin in 2013 when I was in the process of launching my own fund. I was a tech and telecom investment banker in the mid-90s, and the Netscape IPO happened then, and so I've basically been investing in tech since then. And so 7 years ago, decided to start a fund based on what I was forming a thesis around decentralization and the idea that we were primed for a next wave of technology evolution that was going to be built and take advantage of the connectivity that was built through telecom in the 90s, of computer science since the 60s. And it was just going to allow people to interact in a more peer-to-peer basis. And we certainly have seen P2P applications, but the technology wasn't there and the connectivity wasn't there to enable it at mass scale. So yeah, we are investing out of our second fund now, 40 portfolio companies. Over 70% of those touch crypto and blockchain directly, and it's just been a fun ride. And I think the best is yet to come, and we're still early. So that's why we're here, to encourage folks to learn about this and get engaged, because we're in the earliest days of this sector, and there's a lot still to be built out. So on that note, we have a question on how to get well versed on crypto. I think being here and listening to these experts in the space is one step. But Catherine, what would you recommend?
Yeah, I have a couple of recommendations. One, we kind of follow a great motto of educate, don't intimidate. This space is entirely overwhelming, but the best part about it is it's all available to learn about online. So we produce a bunch of content on education focused around, there's a Binance Academy that walks you through kind of the understanding of asset classes, how to trade, what the different protocols mean, how to understand them, how to build that kind of analytical understanding of what you're looking for. Is something decentralized? Is something scalable? Is something secure? Going through those routes, I think that builds the best foundation for you to make the decisions that you need to, understanding the risks at play. The other element I'd say is, it really only takes about $20 on our platform to be able to buy your first piece of Bitcoin or piece of digital asset. And so having skin in this game gives you so much more color anecdotally about the risks, how it feels, what's exciting about the space. And so I highly recommend people at least getting a little bit of skin in the game before they go all in, but also before they continue to stay watching from the sidelines. Just, take a tiny plunge if you're even on listening to this, because it means you're more curious than the rest of the folks.
And you bring up a great point. It doesn't take thousands of dollars.
It really doesn't. And you can own a tiny portion of Bitcoin, or you can own, I think about the CEO from MicroStrategy who put in a good slug of $400 million worth of his treasury into Bitcoin as well. So there's definitely certain folks taking different amounts of leaps into this space.
And I'm sure he experimented with it a little bit before taking that big step.
I think he did too, but it's just the level of conviction. It can be in all sides of the market. No one's right or wrong. It's all based on you and kind of you being in control of your future, and that's where digital assets lets you be in the most control.
Right, Stephen, do you have anything to add?
I've always learned best by setting a goal. And one of the things I like to tell people, if you want to understand or see how it works in action, like with a payment, go buy something, preferably from one of our merchants, but buy something on Newegg, buy your next computer off Newegg and say, I'm going to pay with Bitcoin, right? And that'll force you to set up a wallet and buy the Bitcoin and then actually make that payment and experience it firsthand, right? But you can start with a relatively small amount of money, and that's that's usually the best way to actually just do it and try it, and that'll force you to go and find and read and comprehend. From an investment perspective, I would say know what you're investing in, know why you're investing in it. I mean, there are literally thousands of blockchains out there, thousands of tokens. I dare say not all of them are going to be successful. So there's a lot of risk there that you do need to educate yourself on.
Great. Well, as I knew would happen, this time has gone by very quickly. So many more questions for you, but thank you so much for your time. This was fantastic. Great to see familiar faces here, and I want to thank the audience for listening in.